Sorry about yesterday. We had a super busy day yesterday getting ready for the late session advance. We had some forecasts for yesterday that if the market, actually the center chart right here, if the market got above 45, I think it was 39, but maybe it was 45, 46, that it should run to, oh, I see, we ran further. Yeah, okay. All this additional stuff was today's action. But either way, we were looking for about a 40-point advance up to 45.87 to 80, 85 to 87 as a minimum target on the upside. We got that. That occurred into late yesterday and then today. We've done higher today, and we're now firming up here. So very interesting action. Puts the market in a very interesting position leading into tomorrow, actually for the whole rest of this week. There are certain things that could happen that would force the market lower into some specific dates of this week. But unless and until they can do that, then the market's in a very good position. We really like what we're seeing in today's session. We have some forecasts for what the market's going to do on an hourly basis later today. So we're firming up here. I will tell you one thing, that the market is in a very strong position, particularly if they can close above 45.06 today. So just keep that in mind. So yeah, so very interesting, and very excited to see how we finish up for the week here. Now, there's a lot of people, I've noticed there are several other people that are forecasting. We're looking for a break really from here down. I'm not sure what they were using to think that that was going to happen, but they've had many days of up since then. But, you know, this is a habit with, I've had the habit myself where you just believe in something, even though it's really obvious at some point that that isn't, you got it wrong. You know, it's just not going to happen. And if you trade like that, you end up in a lot of trouble, because if you wait too long to be able to say, okay, there's really, this isn't right, then they could really run quite a distance and cause a lot of grief and take back a lot of, you know, hard-earned gains that you had. But I think in this particular case with this, you know, there was some kind of trend line that he had drawn, and the market was able to break through it. It wasn't able to do what he was thinking for whatever he was thinking, looking for kind of a smash back down to these lows. I don't think these lows are going to be seen for most of this year. So just saying, from our perspective, you know, we have other things that the market is likely going to be doing, which, you know, all of you that have been on our group, you know what our forecast is, and so on. So we have, you know, there's a lot. We'll have our usual pullbacks, of course. We're going to have that. But as it stands right now, we're not really looking for those lows to be tested. It would be much later this year, if this year at all, but much later this year before we would see that. Now, if we have a new forecast that we come out with, that there's some new piece of information that we've discovered or uncovered, then we'll be certainly happy to say that. But I don't think we're going to be seeing much of those lows for quite some time. And then that the same forecast that has us moving up also to very specific prices that we haven't seen yet. This is, you know, this is just the start. Our forecast goes well beyond what you've seen here, but the premise for our forecast has the market actually below these lows at some later point, and we've given that point out when that will be. But that's not in this year, so we'll see how that works out. But that is really what we're looking for now, right now. Let's take a look at all the time frames that we tend to watch. Let me straighten that chart out a little bit here. That's probably a daily. No, I don't know what that is. Let me reload this really briefly. Okay, so I've got way too many charts on this page. That's why it's taking so long. let's go back to, let's take a look at some of the larger time frames. Of course, yearly is very important, but it isn't right now the most important chart. And to know what is the most important chart is a thing. To know what chart is in charge, so to speak, that's a thing. That's something that you will need to know in order to do well. If your trading system doesn't give you a quarterly chart, if you can't get a quarterly chart on your futures trading system, you're using the wrong futures trading system. You just need to find a better futures trading system. It's just that simple. This is quarterly. Quarterly has some things going on in it that I think are important. This is the monthly chart right now, that where we're having the big rally off of our forecast February bottom, the February on-time monthly bottom. And that's one of the reasons we believe the market was in a very strong position. And then we have our weekly chart here. And this weekly chart is showing the weekly chart on a continuation basis where there's a gap. And that gap does represent the difference between the old contract and the new, but even more than that, because they're showing 4,400 here, and they're opening this up at 4,460, and the low is 4,415. The difference between the two contracts was about 7 points. So this has some inaccuracies just by using a continuation chart. So a better idea is just to use the front month chart by clicking no continuation. And while you don't get a lot of previous data, see it's all gone here, you do get this. You do get a correctly identified chart that shows you the weeks that have happened. There's no strange gaps. There's no fake behavior that's in there, things that didn't really happen. There was no gap of 15 points or anything like that. So this is the accurate front month chart. And again, you don't get previous data if that's important to you. It really only gets to be pretty good data from about here, right? I mean, you start getting maybe even here, but you have some data here to work with if that is important to you. And this is where the week really is right now, 4602, 4603. This is the weekly chart. And then, of course, we get into the June contract right here. So there you go. There's a lot of things I could tell you today, and I'm kind of in the mood. I don't have a lot of time, though, today to go over them, but it has to do with the nature of how price moves through time according to time frame. So again, how price moves through time according to the time frame. So that may be all I can really say about it today. And I don't really mean to make this into a big, teaching or, educational thing right here, but there is a big thing with how the market moves. You may have heard me talk about the efficient market theory and how there is in my opinion, first of all, it's a great piece of work. And I think the person, Eugene, can't think of his last name right now, got some kind of a impressive award, and rightfully so, for, he's a scholar and a market person, up in years now, but he developed the efficient market theory, which covers the idea, treats the idea that markets are very efficient. And where is that efficiency? What efficiency is he referring to? He's referring to the efficiency between information that is acquired by market participants and the conversion of that acquired information into price movement and price being at the agreed upon place that it would go if everybody knows that information. So from the knowledge of the information to the conversion into the market, moving to reflect its output from that information is very efficient. Now, you might think that that efficiency is true across the market in all time frames, but it in fact isn't. Actually, as you go up in time frames, the efficiency drops off. As you go down in time frames, the efficiency picks up. So something that is some information that comes in and you're looking at a 1-minute chart, this is just one way of describing this, and people know something and the market needs to go to a certain number because everybody knows it, it converts into that very quickly. But that same thing could be happening on a monthly chart, and it could literally take quite a period of time for the market to fully express the meaning of that information, but on the monthly chart. The monthly chart might need to move 150 points in order to show that. And it's not going to move 150 points in the vast majority of cases today or right now, like it does when you're dealing with it on small time frames. On very small time frames, if there's a place the market should go to that is a response to news and known information converted into price movement, it can get there very quickly because it is a short-term time frame and the targets are nearby. When the targets are much, much further away, the market cannot in a single day express the full embodiment of what everybody now knows in most cases. And the larger the time frame you go up, the less efficient the market is, meaning it takes more time for the market to then complete that conversion into known knowledge and where the price should trade at. And that's why understanding these larger timeframes is important, because the market can signal a very distant price target that is nowhere near where the market is today, and you could have a very good knowledge that that's exactly what the market wants to do, is run to that number, and it will take more time to do so than it would. So there's no universal efficiency ratio. It is different on different time frames, and I find that to be an interesting phenomena in the market. I would love to be able to describe that to the guy, Eugene, and I again apologize for not knowing his last name, and show him and demonstrate for him how that is the case. I think he would find that very interesting, not diminishing any of his work or any of my praise for the efficient market theory. It's a wonderful idea. But I do think there's overwhelming evidence that market efficiency drops off as timeframes go higher and increases dramatically as timeframes are lower. Let's see what's on your mind today about, we can talk about anything you'd like. I don't have a lot of time today, but I would like to hear from you and see what's on your mind. Let's see, Daniel's here and he says, what are your thoughts on Lucid? Well, I really, first of all, just as an electric car maker, I like their product. I like Peter Rawlings, who used to work for Tesla. I don't know him, but I mean, I certainly like what I've seen of him. He's a really talented engineer, and he developed a very, very advanced car. Now, generally speaking, it is widely accepted, and I believe this to be the case, that Tesla's drivetrains and pretty much most of the other parts of their cars, not all of the parts, but a lot of them, are probably 7 or more years ahead of everybody else. Some people would even tell you 10 years ahead. And it is very true that they are quite a bit ahead. They're not ahead in manufacturing quality. They're actually way behind in manufacturing quality. But I do believe that they will fix that at some point, Tesla. So the manufacturing quality is one thing. The car is very heavy on software, and that's where they have their efficiencies, where, instead of having hardware, they have everything is driven by software, and it saves the company a lot of money. They probably have the highest, profit margins and so on. Having said all that, competitors like Lucid have some advantages. Number one, their car quality is vastly improved, particularly for a first product. That's a great thing, fundamentally speaking. You know, they have a great product. I haven't driven it, but it's a great product. It's rip-roaringly fast. I mean, it'll do a 9-second quarter mile in the high nines. So for a big luxury car, that's just blindingly fast. Most of you, if you've never been in a car that does a 9-second quarter mile, would feel sick afterwards. It's so fast and so frightening. So, you know, it's nothing like what most people have driven, and it can turn you white by doing a 9-second quarter mile. Just take my word for it. So anyway, with regard to their stock, let's take a quick look. I think it's, I'm not sure. Here it is. Here's Lucid. So they have a nice little advance coming today. This is Lucid. If you want to, let's take a quick look. Just this is yearly. So really, it looks a lot different, doesn't it? It started out and then now it's gone down. This is, oh, this is Lucid Diagnostics. I'm sorry. Let me see. I'm not sure what the symbol is. LCID, I think it may be. Did I? Yeah, that's what it is. LCID. This is the yearly on Lucid. Let's shrink it down a little bit. And semi-annual on Lucid. And quarterly on Lucid. So you're starting to see a little bit more here. And then monthly on Lucid. Now you're definitely seeing more. And this is a really important chart, the monthly right now, I believe. And then you have the weekly chart for Lucid. So when you ask me what do I think of it, I like it. I like the fact that they're going to close the month above $24. I like a few other things that put Lucid in, you know, an interesting position. It's not necessarily something that, you know, it's an inexpensive stock, so you could buy it for some gains and so on. And we do forecast in Lucid. So, I mean, because we have some stocks that we follow. So I do kind of like it. I prefer, I mean, just personally, I prefer higher priced stocks. I just do. I know it's more expensive, and I'm not saying this to be condescending or anything, but you know, I know that if a $10 stock has a $1 move, that's a 10% move, and that's a pretty good move. But for some reason, moving 1 point just doesn't really do it for me. So I prefer stocks that have bigger swings that are actually bigger in numbers of points. And to get that, you generally have to go with a larger priced stock, a higher priced stock. So, you know, particularly something, you know, Tesla is one that has pretty good moves. Amazon, beautiful, you know, it's a $3,300 stock. You're going to get some pretty big swings. You know, a typical swing for us could have that thing moving 100 points. It's all the same percentages, but I do like bigger swinging stocks. I just do. So that's my preference, but you know, Lucid is an interesting stock. So I don't know else how to answer your question except to say that those are the things on Lucid, Daniel. I like it. Thank you. Connie's here, says any daily, weekly top in S&P. We have not yet triggered a weekly top, but I am forecasting that will occur, and a weekly top will put the market in position for a weekly top, of course, and then a multi-week decline. And we are expecting that relatively soon. So hope that's somewhat useful. Ed is here and he says, can we assume the weekly reflected wave top was triggered with today's action? Actually, on our platform, it was not triggered. On some people's platform, it may have been. It's all good though, because if it was triggered on somebody else's platform this week, it means that we'll probably trigger on our platform relatively soon. We'll all be, you know, within 1 week of each other. So there you are. If you happen to have triggered it, you know, Ed, if you have it, or if you know somebody or whatever, but it hasn't been triggered on our platform on CQG as yet. Rob is here and he says, anything new for soybeans? This decline that we talked about, we had a forecast for this decline. I will even bring it up here and you can take a look at this a little bit. Whoops, let's go down to, so soybeans, we had continued weekly closes below 1705, indicated a decline down to 1660 to 1650. That's right here. And that would be into the week of March 28th or the week of April 4th. If you take a look at soybeans, you'll see that they've done that now. So let me get those up. So this is a 3-minute chart. We don't want a 3-minute chart. I don't know how it got to 3, but this is the daily chart. And so they did close below 1705. Here's a 1701 close. Here's the forecast decline. Today's low is 1622. We were looking for 1660 to 1650. So everything we were looking for has happened for this particular, and I showed you it in writing there. That's what we utilized. Those are our just notes. So nothing really new besides that, but there are bigger things that are bearish, starting to be bearish for soybeans on the monthly and some other charts. So I hope that's a little useful, Stu. Nice to, or hold on here. Let me get back up to the proper name, to Rob. Thank you. Hope that's useful. Rhonda's here. She says, David, I'm sure you meant to say the S&P is in a strong position if it closes today above 46, not 4506. Yes, I did. Thank you. I've been hacking up the the handles, the 46, the 45, the 44. It's just I've done that my whole time in markets. I don't know. It's hard for me to flip my head from a 45 handle to a what they call the handle, the first two digits, over to 46, over to 47. I get it. I mess it up all the time. And you're in the meeting, so I can do that. Anyway, I did mean for sure that we're talking about closing above 4605. And so 4605 or 4606 to 4605 is kind of a little center of gravity for the market. We knew that it would be coming back up to this number in today's session. We told our group that was going to be the case. This is a center of gravity, so to speak, kind of like a square. And speaking of squares, we're going to have our meeting today about the square principle, if I can just throw this in, right at 12:30 Pacific time. So you're going to go new forecast live utilizing the square principle. You just click on register, and you can go in and register for, when it gets up here, you can register for it just by putting your name in and so on. So that's 12:30 Pacific time today. And if you want to come to that, we'll tell you about the upcoming June 25th and 26th, Saturday and Sunday Square Principle Seminar. Now, a lot of you come here with the hopes of getting a trade, maybe, or with the hopes of learning something. But to really learn something, particularly from me, you would have to come to a seminar to really understand the basis for how all this is done. I know there are very smart people that are here, and by my giving out forecasts, sometimes people can maybe work out something that might be helpful to them in understanding markets. But you can go years and years trying to do that, trying to reverse engineer what I do, with forecasting and so on. It would not be easy for somebody to really understand how it all works without being told. And it is so easy once you have been told how to do it. Why would you torture yourself with all that? And the answer is money. That's the reason. Most people are very uncomfortable. They might actually be more comfortable losing, and I get this, they may be more comfortable losing money in a trade by their own hand and saying, well, at least I lost it, right? I lost, our seminars are $6,995. That's a chunk of money. And a person could say, well, if I'm going to lose that in my trading account, at least I did that. They don't want to necessarily pay it out to learn. Now, some people do, because we've had, we've done a large number of seminars. People do come to it and they do get the benefit, and they're able to utilize the information. I would say to those that are, particularly those that are waiting to try to pick up information and and which is fine, because I consciously give it out here, but it is difficult to put it all together, even if you're really bright. And I don't consider myself the smartest guy, knife in the drawer, guy in the room, or whatever the sayings are. It is difficult, even if you're really smart, to put it together. And in a single weekend, I can put it together for you. And then you go home and start practicing with it. And before you know it, you're starting to really see how remarkably different it is when you understand what the likely outcome of a set of conditions is. And that's what we're all trying to do. Anyway, so I won't go on about that, but that's just what's coming up here today. If you want to check it out, you're welcome to come. I may make a forecast in today's, I've made 5 forecasts live in the meeting for either price movement to, in a day to be somewhere, or for next week for something to be somewhere. I've done that 5 times now. Today would be the 6th. All of them have been correct. The last one was, I would have to bring our Twitter up, but the last one was last week. Let me see if I can find it here. If we go to Page Trader here, let me just see. Not sure where I actually am here. Let's go backwards. If we go to Page Trader and go scroll down a little bit, it's somewhere here, but I'll show it to you. If I can't find it, I can't find it here. Anyway, it's in here somewhere. It was last week. By late today or slightly beyond. This might have been it. Anyway, bottom line is it was live. People were there. And I also made the forecast last week that Tesla would be trading at 1,050 or higher this week. So these are made with the square principle. This is Tesla. And so this was made on Tuesday of last week. So we'd have to get to the dates. Let me just show you where Tesla was at that time. One moment for dates, and I'll show it to you. But my point is, I guess Tuesday of last week was the 22nd. So let's see. This was the 22nd right here. And the market hadn't quite closed. It was probably trading around 980 at the time. And we said that this week, the week of the 28th, Tesla would be up at 1,050 or higher. It actually, today's low, or yesterday's low, was 1,053. And, today we've made a high of 1,114. This is why you don't want to be short Tesla, right? So we've had a beautiful move up, super pleased with the outcome of that. But I'm planning on making a forecast today again, if it's available, because sometimes by the time the meeting starts, we're out of forecasts. We've made them all. So there you go. Let's see, Samuel, hi, David, any thoughts on oil? Yeah, we do have thoughts on oil. We are very close to a daily bottom in oil, so that's interesting. That's about all I can say right now, but there is a daily bottom that is coming in oil that we're going to be interested in buying. So that's close by. Richard Tierney says, I have an upside target close above 46.90 to complete. Okay, super. Thank you, Richard. Stu says, hi, David, with gold missing its second target of 1977 and selling hard, do you see any bottom completions or will continue down more? We do have a little something we're putting together for gold. We have a daily closing level that if they close above it, then in the next several days, we would be at a certain price on the upside. It's not huge, but it is tradable. So that's about all I can say, is that we will close above this level today, and I think we will close above that level tomorrow, and that kind of puts things into play for that move. Thanks, Stu. It's on the long side. Connie's here, and he says, so you have changed the long-term outlook for S&P to go heavy down move this year? No, I haven't changed anything. I can't give you out everything that I've given out, but the forecast is exactly the same as it was literally a month ago. And that has to do with where the S&P is going to be later this year. And then from that point, or even failing from a slightly higher point than that, then we're expecting a very sharp move down. That takes us, I'm giving the time frame out, that takes us into next year, that big decline that we're talking about. So I hope that's helpful. We haven't made any change in the forecast, though. Thank you, Joel. Eugene Fama. I've never met him, but I like him, and I very much like his work, and I'd love to be in contact with him just to show the premise and demonstrate it for him, demonstrate how the efficiency changes on time frames. Joel also says, you only know what you know when you know it. And that is might be one of his sayings. That might be one of maybe that's one of Eugene Fama's sayings. I like both him and I like Mikkel. I can't think of his name. The guy that wrote the Random Walk Down Wall Street. He's completely, absolutely dead wrong. The book is nonsense, utter nonsense. He's completely wrong. Totally provable. Nothing that we do would be possible if he was correct. None of these huge forecasts, none of these intraday forecasts, none of these hourly 15-minute forecasts, highly specific for markets to be at specific exact prices at specific exact times. None of that would be possible. Repeatedly, thousands and thousands of them done if his book was anywhere near correct. But he's a market guy, and he was trying as a mathematician and as a scholar, he was trying to, and I grew up around educated people. You know, my stepfather was a dean of humanities at Cal State Northridge and so on. I was in all of that. I know the mindset and the people there, and he did his very best work. And I very much appreciate him treating the subject. That's what he did. He treated the subject. And the book became extremely popular. The Random Walk Down Wall Street is very, very popular. So, you know, he did well with that. And he himself, at this point in his life, I absolutely guarantee you, does not believe his own book. Because I've spoken to him, and he's made comments that would make no sense if he believed his own book, if he believed his own information. The markets are not at all random, and never have been random, and as far as I know, never will be random. And then there's the issue of what you even mean by random, because I've told you before, random really is a matter of perspective, right? For those of you that are new, if I'm walking down the street and something falls out of the sky and hits me on the head, or a drop of water, that's random to me from my perspective. I wasn't expecting it. It just landed out of nowhere. I didn't invite it. It's random. It just landed on my head. I happened to be in the right place at the right time. But from this perspective of the drop of water, it's absolutely following every law of physics known to man and unknown to man in order to get to land on my head. There's nothing random about it. So randomness is probably much more a function of perspective than it is of the actual condition of the event itself. So, but that doesn't even really address the fact that the markets are not random innately, that their movements are not random innately, that they have to satisfy certain things, have to be satisfied because they have a nature. That's what I'd love to show him and demonstrate. I do it every day here at Page Trader. I haven't done it for the people that have written these books. And many people who have written books are not interested. Not saying that that's the case in this case, but many are not. They don't want to be challenged. And I'm not here to be faster gun or anything like that. I just would love to show them, look what can be done, you know, with markets. FT's here and he says, hi, when you say higher time frames, are you referring to longer term or shorter term charts? Higher term time frames usually for me means longer term. Shorter term means, you know, shorter term time frames. And all of them, all of those time frames are part of one whole market. So imagine an ocean and a wave appears in the ocean. And for a minute, for a while, for the life expectancy of the wave believes that it's an individual, that it operates under its own power. Right? And it looks around, just work with me on this. It looks around and says, hey, I'm a wave and I feel this power and I can look around and see the seashore and I can see people on the beach and I'm coming into the seashore and I'm doing what I'm doing. I'm doing all this. That's what the wave says. But the wave is mistaken. The wave actually is a temporary expression of the whole ocean. And when the wave, at some point, the ocean stops expressing itself through that particular wave. And when the ocean, which is the whole, stops expressing itself through that individual expression called the wave merely resides back in what it was always, which was part of the whole market, part of the whole ocean, right? It was never really an independent existence. it felt to itself it had an independent existence. It looked to itself like it had an independent existence, but it was deriving all of its power from the whole, which it itself is. The wave is part of the whole. It's an expression of the whole. I just explained life and death to you in human terms. So, the way that you think about something often helps you to understand it and ultimately exceed or go into it in a much deeper way than thinking about it like most people think about life and death. And you could certainly take that wave expression and say that the whole expresses itself for a while as an individual, and then upon the individual's death, he doesn't die, so to speak. The body stops living, but the whole, he goes back into the whole, the WHOLE, from which he came from. He was always the whole, but for a period of time, he felt that he was completely independent from the whole. I mean, you can't even describe how you move your arm up and down, right? You can't even say this is how that actually happens, because you don't know where that power is coming from. You could say, well, I'm getting it from eating food, and that turns into electrical, and then I do that. Yeah, that's very limited understanding. But where the whole power comes from is the whole. So it's like that with the ocean, and the markets are like the ocean as well. Waves express themselves for a period of time, and then they go back into the whole. There's no longer being expressed as that particular wave, and then another expression occurs. And I'm very philosophical on a certain level about thinking about those kinds of things, but it has helped me to understand, or at least to come up with a way of thinking about something that gives me a direction to work from. I was saying all that in response to FT. I know you can get me going. Richard's here, and he says, CNBC boys said bigger buyers of Friday's expiration 30 calls, squeeze game, momentum players, sorry, Lucid. Yep. Yeah, I'm sure that's what they're saying. I'm positive. Bradley Bowles, Tesla. Yeah, Bradley, the Tesla we talked about, I'm not sure if you're commenting on that or not, but we had, they're above the 1,050 that we were looking for. Nothing, Gary. Thank you, Bradley. Nothing in natural gas. Tesla just announced a stock split. They want to pay dividends. So Joseph says, thank you. That's great. That would be fantastic. Burton Mikhail. That's good. Thank you very much. Burton Mikhail. Very nice man. The guy that wrote the Random Walk Down Wall Street. Thank you, Joel. William is here, and he says, good morning, David. Does Jerry still conduct workshops in the Squares room? He does. You can call in and talk to him about that, or call in and ask about it. We'd be very happy to have you take a look at it again. Samuel's here, and he says, if you expect a daily bottom in oil, do you mean that we have not found the daily bottom today already? If they close above a certain level, we consider the daily bottom likely already in, but tomorrow is the on-time day. So one of the things I like, and I'm sure many of you too as well, is I like to have a bottom get put in and specific prices maintained while that bottom is being put in, so that we're using two of the three sort of dimensions of the market. Although price itself is really not a dimension, it moves through a dimension. So when people generally, and I don't object to the language, you could say, well, there's three dimensions. There's time, which is the most important. And then there's price, which isn't really a dimension. And then there's, say, volume, which is the depth of participation in the market. And those things all add up to perhaps a way of saying, here's the three dimensions of the market. And why would that be important? Because there's nothing that you know about that isn't in three dimensions. That's why. So everything that's in three dimensions has three dimensions. It's that simple. So if you really want to understand something, you do want to understand it as something that has three dimensions. Now, there may be subatomic and other levels that don't actually have that kind of dimensionality, even though it's very hard to imagine how that might be. One of the greats behind subatomic theory said, if you feel you understand the subatomic theory, then you just don't really understand it, because it is so completely different and so bizarre from what we know in our above atomic level. It's action and reaction and so on. And there's lots of arguments going on about whether Einstein was right or wrong about the speed of light being the absolute highest speed of the universe and so on. But there's a problem with it, because the universe they're talking about in measuring the speed of light is the universe above the subatomic level. Again, it's like the ocean. It's all part of the same thing. But when you go below the level that you and I can touch, see, think, and feel, and act and react from, you're down at the subatomic level where things are radically, unbelievably, unfathomably different, beyond anything that anyone could have imagined. So there may not be an issue with the speed of light down there. And by the way, I don't know if you've ever thought about this, but nobody really knows the speed of light. I don't know if you've known that. You've probably already always heard the speed of light's 186,000 such miles per second, right? That's how fast this, or not miles per second, but yeah, maybe it is miles per second, 186,000 miles per second. That's the apparent speed of light. But in order to measure the speed of light, you have to work with a reflection. You can't measure the speed of light just with a one way. It has to be two ways in order to make the actual measurement in all cases. And the problem with our universe is that whatever you can't see, it is almost always doing something different than you expected in that spot. And the universe protects information in a very interesting way. So because we don't really truly know the speed of light, we only know the reflected measurement. We don't know the original speed of light when it's first sent out. Because of that, the speed of light may be very different originally, which we can't measure, and we're measuring the reflection. That's how all measurements for the speed of light work right now. So a universe may look very, very like it's just a big nothing, but there's such vast intelligence going on, and the layout of the universe, the way that information is protected and the way the information is, like when you're down at the subatomic level, you can't know the position of anything because something hasn't yet taken a position, and only takes a position when it's observed. And this is the current state of it, that we know we're going to find deeper things than that. But it's very, very interesting how things go. And all this is part of you and me as physical entities. The subatomic world is a part of us. Anyway, and thank you, Samuel. I appreciate that. Joseph says, no date yet, but it'll be announced. Thank you. And then Jim says, the waves within the ocean would also be a good example for the square within the square. Absolutely. You could use the waves within the ocean and say that in each wave, there are smaller waves that are part of the makeup of that total wave. And it's a good idea to know what those are so that you can make better you can have better understanding about what is happening. So listen, I will have to leave you here now. Stay with me for one moment as I'm saying goodbye. Just a moment. Second here. So I'll see all of you tomorrow. Thanks for coming today. I wanted to make up a little bit for tomorrow because we missed it. I can't promise you we'll be here because the markets may be very busy. Stay well. I'll see you here next time. Thanks for the great conversation. See you then.